My credit score is currently 571.
You ready for this?
Go ahead.
$56,000 in negative equity.
All right, as always, we're looking at bad credit, negative equity, and just all around bad financial decisions. These are the exact situations we want to avoid if we're trying to get ahead financially.
I wanted to buy a vehicle. I only have credit card debt of $4,000, which I'm clearing most by that time. I'm ready to purchase a vehicle. My credit score is currently a 571. I'm thinking of buying a Jeep. Do you think a Jeep would be a good option, or should I purchase something else? I also have a second job that I earn $800 bi-weekly. She makes about $5,600 a month. Let's give him a call. Hey, how are you? This is Yusuf. I know you're looking for some advice. Break it down for me.
It's actually my first vehicle. I'm interested in the Jeep. I was thinking like a Sport. My credit score is currently 571.
With a 571 credit score, I wouldn't even consider financing a vehicle. At that score, the interest rate is going to be brutal, and you're going to be paying far more than the vehicle is actually worth. It's just not worth it.
Why is your credit score so low?
I just started building my credit, and then I was out of the job last year for almost 12 months. I had to use up my credit card, and that's the only thing that I have building my credit.
Have you missed any payments?
Yeah, I have missed a few. I've been on track since May.
So if you only have about 4 to 5 months of good payment history, you might want to wait a little longer. Do you have any money down to get into a vehicle?
Not right now.
It's not going to be smart for you to get into a vehicle. If a dealership can get you into a vehicle, it's going to be 25-30% interest rate, and then they're probably going to tack on a bunch of fees and whatnot. Is there a reason why you don't have any money saved?
Because I had some stuff doing for the past couple months, yeah.
She is barely keeping up as it is. She's only about 5 months into getting back on track with paying her bills. A 25 to 30% interest rate is going to push her right back into the same situation. No money down. $4,000 in credit card debt. This is not the time to be financing a vehicle. Pay down the debt, build up some savings, and find a vehicle that fits your budget and that you can pay for in cash.
You don't have anybody that can co-sign for you on a vehicle?
Yes.
Do they have good credit?
In the high 600.
The thing is once you bring on a co-signer, you're going to be responsible for their credit too. So if you miss a payment or two, that's going to affect them. And now you're in a situation where you might fight your friendship or your family. But right now, I would just wait till your credit is better. Save up a couple $1,000s or ask to borrow $1,500, $2,000 and just go buy a cheap Honda. I think you should definitely just take a step back.
Okay, thank you.
Let me know if you see anything on our website, autocafe.com.
I will.
Thank you.
We don't know her exact financial situation, but with a monthly income of $5,600 and only a small amount of debt, she should have no problem saving up a few $1,000s and buying a cheap car with cash. No borrowing, no co-signers, no debt. And that'll always be the best move.
How much negative equity do you think we're going to have here?
Oh, 50,000?
Oh, man. His payoff is higher than the MSRP.
Yes.
Social media is going to have a field day with this when I tell you what the trade number
This
is.
is a lease, right?
Yeah, it is.
Still, he must have rolled. He had a G-Wagon.
Well, clearly he did, because his payoff is still higher than the MSRP. The adjusted cap cost at the beginning of the lease was $138,937. The deals with what they were even a year ago, with all the incentives that we had, to still have a cap cost, 18 grand over MSRP, he would have had to roll a massive amount of negative equity. I don't think he's a stranger to that. But you said that he wanted a GLE?
450E, and as low as you get it with Airmatic.
So this guy clearly loves debt, and he's always looking for more of it. With the kind of cars he's buying, I'd imagine he has a strong income. But the way he's buying vehicles, he's throwing an unbelievable amount of money away. His payoff is higher than the MSRP. Having money doesn't mean you're good with it.
The problem is that unlike on this car that had big incentives, that has the lease cash, but that's it. Unless he would be coming to the table with a big down payment, because he is looking at, you ready for this?
Go ahead.
$56,000 in negative equity.
That's not the highest I've ever seen, but pretty close.
How many miles are on it? I'm sorry, actually, I forgot to update the miles. Oh no. 62.5. I think that he needs to keep this for a little while longer. Here's the thing. If he was even a couple payments further in, we could do an LAP, but you've got to have less than 2 years left on the lease. Yes. So right now, we have to take it in straight payoff, which is not optimal.
$62,500 more than the vehicle is actually worth. You're just refinancing losses. Every time he trades, the negative equity doesn't disappear. It gets carried forward plus interest. So even if he has a good income, it doesn't matter. The structure of the deal guarantees he keeps losing. And this is exactly how people with money can go broke.
Here's why I say the car loan I took out 4 years ago taught me a very valuable financial lesson, and that is that I will never, ever take out a car loan again. That car cost me $23,000 back in 2021. I have paid $3,000 in interest in the last 4 years, $9,000 in insurance, $2,400 in registration, and I would save roughly $5,000 in maintenance, which brings me to a total of $43,000 in the last 4 years spent on a car that no longer works.
The money is gone and there's nothing to show for it. No reliable transportation, no asset. If that same money had gone towards something reliable, or even just been saved, she wouldn't be in this position today. $43,000 over 4 years is a significant amount for any vehicle. When that level of spending still results in a vehicle that doesn't run, it shows how expensive car ownership can become when things don't go as planned.
Versus if I had bought a car cash for, let's say, $5,000, which I think that's pushing it, I would have spent nothing on interest, roughly around $3,000 in the last 4 years, maybe $400 in registration and tag fees, and I would say around $2,000 in maintenance, a total of $11,000. And more than likely, I am sure it would be guaranteed that that car would still be working, because in my opinion, older cars are much more reliable. And I think that's because they've been around for a while, so owners have already discovered their common issues, their weaknesses, their recalls. It's just much easier to check reviews, reliability reports, or YouTube breakdowns to know what to expect versus brand new model cars. You're going to be the test subject.
It would be impossible to estimate maintenance costs exactly, but overall she would have saved a significant amount of money. Even accounting for repairs and upkeep, the total cost would have been far lower. Some of the best cars I've owned were under $5,000. They weren't flashy, but they were reliable, and they did exactly what a vehicle is supposed to do. Get you from point A to point B without destroying your finances.
I make good money, and I'm still drowning. Let's be honest for a second. I'm a nurse. My husband works in the oil field. On paper, we should be fine. But the truth? We're in debt. I'm exhausted. And I was quietly panicking about how the hell I would make it to retirement without losing my mind. My husband is gone for long stretches. I work full-time. I run the house. I manage the bills. I handle the kids, and no one talks about how heavy that gets. Here's the part I'm afraid to say out loud. I don't want to be a nurse anymore. Not because I'm lazy, but because this life is costing me my peace and my presence with my girls.
She makes good money. On paper, her income probably looks good, but most of it is likely already spoken for. Bills, payments, obligations. Probably nothing left at the end of the month. And when there's nothing left, even a good income turns into stress. That's how someone ends up burnt out and feeling like they're drowning.
I was recently in a wreck, pretty much destroyed my fiance's car, which she had coverage for, but both of our insurance, I had my own insurance too, but both of our insurance company had denied coverage, so now I'm stuck with an extra car payment every month for a car that's not usable, can't even sell it. Or if I were to sell it, it would only be worth, roughly $2,000 or something for the junk pile that it is now, compared to the $26,000 I owe on it. Trying to figure out when would be the best time to consider bankruptcy.
99% of people who call in saying, I think I need to file bankruptcy, absolutely don't. What they really need is hope and a plan.
He owes $26,000 on a vehicle that's already wrecked. The vehicle is gone, but the debt isn't. That loan still has to be paid, even though there's nothing left to drive or sell. This is one of the hardest lessons with car financing. The moment the car disappears, the obligation doesn't. And if there isn't proper coverage, you're left paying for something that no longer exists.
Because right now life is scary. Because you're broke, right. You've got this car situation, you can't afford this payment, and you feel like there's nowhere left to turn. What was the situation where they denied coverage completely?
What it was, I was excluded on her policy for her to keep her premiums down. And then my insurance it's denying coverage because that vehicle, I had co-signed on it. And they considered that I am part owner and that wasn't under my policy, so that's their loophole. So both the insurance company have the loophole, and now the only hope I would think now is that I can minimize it because I did have gap insurance on that vehicle when we got it from the dealership. I'm stuck paying this $26,000, and we had to get her a second car, which they managed to approve, and she has a second car, which is now another high payment a month. So we're making technically 3 car payments now.
3 monthly obligations tied to depreciating assets. That's a lot of fixed costs locked into vehicles alone. Even with a decent income, carrying multiple car payments adds constant pressure. There's no flexibility, no margin, and no room for anything unexpected. It turns transportation into a permanent financial strain instead of a tool.
And up top of all our other, rent, because we don't own a home, but we have our rent and our other living expenses.
So you guys are living together? Have you combined finances, or are they still separate?
They're right now, we have 2 separate bank accounts, but I've started putting my deposits in her bank account. So we have our bank account, and I have my old bank account.
We need to keep our life separate right now. She needs to worry about her debt. You need to be worried about your debt. And now you have this new payment on the line here. What other debt do you have?
Well, we have roughly about 5,000 in credit card debt.
Okay, and then how much total in the car debt?
Probably 55,000, maybe average total.
He's depositing his paycheck into his girlfriend's account. That's risky, no matter how strong the relationship feels at the time. Once the money goes into someone else's account, it's no longer under your direct control. If things change, access to that money can become a problem very quickly. It creates unnecessary risk, and there's no upside that justifies it.
The goal here is that you're not underwater, meaning the car is still worth 26 or more, and you could sell it and get out from under this payment and get something real cheap. So you're A1 right now. You need $1,000 in the bank for you. And right now, you guys aren't married. She needs to worry about her debt. You need to worry about your debt. The goal is for both of you to become debt-free. But combining bank accounts and both of you making bad financial decisions that you're both liable for, we got to quit that. No more co-signing, no more refinancing, no more consolidation, and I got a plan. The only way out of this is to get out of this, and that's selling the cars, getting the income up, cutting expenses down to nothing, and no more debt. Just tell yourself, debt is not an option. What am I going to do if debt did not exist?
The best solution is getting out of debt. That usually means making uncomfortable decisions. Selling cars, downgrading, living uncomfortably for a while. But that discomfort is temporary. Debt is what keeps the pressure on long term. If you want to see more, you know what to do. I'll see you in the next one. Bye.